Digital and marketing agencies have a growth curve that, man, it's almost a joke. I have personally seen agencies go from half a million to 1.2 to 1.7 in just under 2 years. That's not normal. That kind of growth, based on my experience, is very specific to the industry. And I know it may sound great, but then the question is, why exactly do agencies ever fail? Well, it's not because they don't have enough clients, nor because they don't have enough work, but because the very same growth that they are known for exposes their weaknesses faster than the founder can fix. So today I'm going to give you the one foundational thing that you can do to set yourself up for success and 3 different ways on how you can use it to help you sustainably grow your agency. I'm Jose Cardenas, CPA and enrolled agent at Western Tax and Accounting. We help growing businesses, especially digital agencies, dial in their bookkeeping, their accounting, and tax planning. Now, before we go any further, let's address the elephant in the room. Jose, you are a CPA. You're probably going to talk about bookkeeping or taxes. No. Why? Well, because I understand that the stress that comes from growing agencies reaching 7 figures, for example, it's not just part of running an agency business. I understand that that's what happens when you outgrow generic bookkeeping and tax prep. At that point in time, when you reach that level of revenue, you need accounting. You need real accounting that, yes, honestly, you cannot get without clean books, but more importantly, you cannot get without data from your operations. And for agencies, that data point in their operations starts with one thing: time tracking. And look, I know that you probably rolled your eyes on me on that one, and you're probably asking yourself, why tracking? Why time tracking? And well, for growing agencies, your biggest expense is labor, not taxes. So logically, start by controlling labor costs, somehow at least. This is why time is your biggest cost, not taxes. And honestly, it's the one thing you understand the least. And that's how you end up hiring on instincts, under pressure. It's how you never end up seeing any low margin clients, any low margin retainers. And it's how you end up pricing on vibes, pricing on energy, on how you feel. But more importantly, when you dial in your time tracking, that's where you begin to start pushing yourself, your team, your agency into being more efficient with fulfilling work. And that's what makes you a more profitable agency. And look, no need for fancy software when you're starting out. Just Excel will just do, that will do just fine. Just gotta make sure, keep it clean and keep it moving. You're probably thinking your most profitable retainer or project is the one that actually pays you the most. But let's think about that for just a second. Would you take $10,000 for a week's worth of work or $5,000 for work that takes you 2 days? Well, for the 10 grand, you're making 2 grand a day. For the 5 grand project, you're making $2,500 a day. So taking the $5,000 project is more profitable to you. And having this kind of insight as an example is just a starting point for you to start pricing better and start focusing on projects and maybe certain profile retainers that makes your agency most profitable. Now, before you get into time tracking, please do not make the mistake of just lap dropping your team starting next Monday of next week to track their time. Because I would say that, ideally speaking, you should start tracking your own time first. Track how long core tasks take you. Track how long retainers time consume every week, every month, every quarter. Find where you have the most kind of circumstances where your work expands beyond expectations. That's what we call your scope creeps. And look, this is, I would say, the best way for you to create your baseline because it's a baseline that you can trust and you can defend. Once you have time data that maybe you were able to gather on your own or you came up with your own estimations, there are 3 metrics, I would say, that every single agency owner needs. Number 1, standard time. This is your expected time a task should take for you to complete. So for example, it could be making content for a retainer, maybe building a website, or how long it takes to just handle a paid ads account over a week, a month, or a quarter. And like we discussed, this can come from your own track time or from a reasonable estimate that you can come up with. And remember, this is the baseline time expectation for what you do as part of your offerings in your digital agency. It's an equivalent, if this helps, it's an equivalent of having a budget for your financials, but for your operations, if that helps. Number two is actual time. And to be honest with you, this is straightforward, I would say. It's simply how long a project or a task actually takes you. How much time do you really spend on doing the work, on performing the work? And this is where insight starts. Because if you compare your standard time to your actual time, then you will know if you're losing margin or you're gaining margin. This is the starting point of how you uncover, for example, clients or retainers that you think are profitable, but really are not, any scope creeps that your business has normalized, or any inefficiencies that you didn't know existed. And unfortunately, almost every agency owner thinks that they know these by heart, by their feelings. And well, unfortunately, I would have to disagree. With your standard and your actual time in your back pocket, now we get into the third one, your capacity in hours. A little bit more of an advanced metric, but don't worry. To get started, you can just have it in time terms. You don't need it in dollars. And you can just use your average total actual time for a given month, just to see if your team can take on more work for the current month or if the work should cascade over into next month. Getting this metric dialed in, your capacity in hours, is where you start to actually intentionally hire and not panic hire. So yeah, that is time in 3 different ways on how you can use time tracking for you to sustainably grow your agency. And yeah, that was lots of good stuff, I would say. And we haven't even touched on how this translates into accounting, into dollars. And I mean, we start asking how much profit you make by just improving efficiency levels by just 1 hour per week on a given month, on a given year, what your financials should look like versus what they are. Huge difference between accounting and bookkeeping, I would say. And when you have an employee, your cost is not their salary only. It's also time spent on admin and not on working on retainers. It's time savings, maybe PTO as well. And look, payroll taxes. This is where accounting starts doing its magic for your digital or marketing agencies. This is when your financials start working for your agency and not just for the IRS. Your financials should amplify your operational clarity. This is where profit becomes explainable and cash in taxes becomes predictable. And that concludes this video. Man, that was good. Make sure you smash the like button, subscribe to the channel, follow the channel. Let me know if you have any questions in the comments, or if there's anything that you want me to cover specifically, let me know in the comments. And with that said, I'll see you on the next one.